Well, 10-year Treasury futures, pretty sturdy rally today, pretty wide range. Otherwise, a pretty flat day in the markets. Domestic information was really good today. Jobless claims for the week, 200,000, actually below 200,000 for the very first time since 1969. Leading indicators down 0.1% in December, and the flash PMI 54.9 versus last month at 53.8. Thinking that would put a risk-on mode into bonds. It did not. Bonds rallied overnight with soft data. PMIs in both Japan and the Eurozone were soft and weaker than expected. German 10-year Bunds came out closing at just a hair over 13 basis points. So yield compression is the name of the game. Perhaps that's why we're seeing a rally in the 10-year futures. Overnight, cash was a little lackluster, volume about 86% of the 10-day moving average, although 10-year bonds took a 36% of that 86 percentile overnight. Most people continue to speak about dollar strength and G4 interest rate compression as being the main driver for lower yields, higher bonds here at the CME. They opened today at yielding 2.744. The high was 2.756. The low was 2.706, so a 5 basis point range today. Most traders would admit that it is quiet, largely because we're waiting for next week's FOMC meeting and the newly added press conference afterwards. With that in mind, technicians point out that futures resistance would have an implied yield of 2.54. Future support would have an implied yield of 2.759.